Good evening, everyone. The stock market is closed now, and I am here with latest stock market update. And this is Accord Capital Services Group. Let's have a look at the basic fundamental and key points of the market behavior. As we all know, previously, due to continuous foreign outflows and lackluster earnings, the index had declined for 3 consecutive days. After a slight rise on Thursday, the Indian benchmark indices fluctuated between gains and losses, ending the day mostly flat. The Gift Nifty experienced a volatile session on Thursday, forming a candle with both upper and lower shadows here. And the index is currently trading at 24,450 points. On Wednesday, the Indian market halted its decline and rebounded, showing a volatile recovery pattern. Today, the Mumbai Stock Exchange Sensex index closed at 80,065, down by 16.82 or 0.2%, while the Nifty index closed at 24,399, down by 36.10 or 0.15%. The Nifty 50 formed a candle with the both upper and lower shadows, only the day chart, indicating a sign of volatile bottoming out almost. On October 24th, Nifty closed its lowest point in 2 months, marking its fourth consecutive day of decline, and earning reports failed to boost investors' sentiments. Nifty experienced a high-low fluctuation of 139 points, with trading volume decreased by 17% compared to the previous trading day. This suggests that the persistent selling pressure may be nearing an end. Nifty exhibited a volatile performance today, forming a lower shadow candle in here and indicating a sign of short-term bottoming out coupled with a decreasing in the trading volume. This suggests that the selling pressure is diminishing and index might be poised for a rebound from here. And the Bank Nifty index closed at 51,531 and up by 292.15 or 0.57%. Today, Bank Nifty index outperformed the Indian benchmark indices, showing a strength and representing a positive signal of bouncing here from the rising channel. The Bank Nifty index rose against the trend today, preventing the Indian market from falling further. Overall, the Bank Nifty index is still in volatile pattern with no clear short-term direction here. Now we have top gainers or top losers of the day. And the top gainers is the Primal Pharma, Sona BLW Precision, Forging, Aster DM Health, Adani Gas, Adani Wilmar, Syngene International, and the top losers are Capit Tech International, VIP India, Dr. Lal, Paths Labs, and the fourth one is the Hindustan Unilever share and the Escort Services Escort Kabuta share. All the Asian markets show a mixed performances. Among major indices, the FTSE Straits Time Index in Singapore rose 0.12%, while Japan's Nike Index almost up to 0.10%. The Hang Seng Index is about falling 1.3% of the day. S&P 500 index closed down first in the morning 53.78 points or 0.92%, and now it's trading at 12.19 points or 0.22%, rising at 5,810. And the Dow Jones Industrial Average closed down 409 points and now is trading at 42,421 and minus 22%. And if we talk about the Nasdaq Composite Index, the close it is closed down by 2097 points or 1.16%, and now it's trading at positive 96.60 or positive 0.54%, with value almost about 80,375 by price. The market fear index VIX, many call it the greed and fear index, it also fell by 4.45%, indicating a short-term traders and investors panic has eased and the selling pressure in the market has reduced pretty much. So we have IPO for talk about here, the Usha Financial Services. You can see a lot of details about Usha Financial Services. Usha Financial Services has set the price range for its initial public offering at 160 to 168 per share with a minimum lot size of 800 shares. The expected percentage gain per share is about 50.30%. And if we talk about the top stock news here, the first one have the Ujjivan Small Finance Bank, reported as 29% decline in the net profit for the September quarter due to deteriorating asset quality and increased expenses. Operating profit also fell by 4.5%. And the Indian rupees closed mostly the flat on Thursday. The potential outflows from the local stock market prevented it from following the rise of other Asian currencies. However, the dollar selling by the state-owned banks helped the currency stay above its historical lows. The pharma stock priced primal pharma stock price surged 15% on the Indian stock exchange to a high record. So its operating revenue for the second quarter rose to 2,242 million almost, and the 17% increase year and year over from 1,911 millions, primarily driven by the strong growth in its CDMO business. And the third one is has Colgate Palmolive India, and it's a 16.2% year and year over increase in a net profit to 3.401 billion for the second quarter and at the ending of September 2024, benefiting from its highest ever quarterly revenue. India's major stock indices declined for the fourth consecutive day trading, first and foremost dragged down by auto and fast moving consumer goods, we call it FMCG stock. Today, approximately 1,511 stocks advances, 2,248 stocks declined, and 101 stocks remained unchanged. The Nifty FMCG was the worst performing sector, falling nearly 3% almost and trading at 58,396. It's all due to the significant sell-offs in Hindustan, Unilever, ITC, and Nestle, while the Nifty Bank recorded a notable gain of 0.6%. Despite the continuous selling by foreign institutional investors, the benchmark indices record only the modest decline. In India's PMI data for October continued to show a wealthy growth, as well as which also known as sports the Reserve Bank of India growth guidelines for fiscal year 2025. Meanwhile, the FMCG sector declined due to a delayed demand recovery and profit pressures. The short-term trend for Nifty remains negative. However, the Nifty current pattern formation suggests a potential upward rebound from here slightly lower levels. If its sustained breakout above 24,000 or 600 level or 24,700 level, it will bounce back almost upward direction. Conversely, if it's break below 23,000, it will almost gain its loses its potential and could trigger the further short-term weakness. In its scenario, there is the market sentiment for today. Now it's performance review time. We will talk about the stock we recommended earlier for buying. That one is the Milgray Finance and Investment Limited. In the early trading session on October 24th, we recommended Milgray Finance and Investment Limited, which rose by 10% intraday and hit the upper circuit strategy limit. Currently, the stock is in an accelerated upward phase and expected to continue reaching new heights in the future. Congratulations to those investors who participated, and you have already achieved the significant profits here. Now we talk about the stock recommendations. The stock we recommended 3 to 4 stocks every day. The first stock here we have the Romans investment potential. The Romans is indeed worth paying attention to. The company has shown excellent market prospects with its strong position in the edible oil market and growing trend of healthy consumptions. Its solid financial performances are good cash flow, not support the future development but also give investors confidence. With the overall market environment warming up, Romel's stock price is upside is even more exciting. Overall, the stable market share and excellent financial indicators make it an attractive investment option. And the second one is Capstone's latest performance and future market prospects show its investment value, which is mainly reflected the following aspects. The first one is the company continued growth showed its financial health and the robustness of its business model in the field of commercial services, which enhances investors' confidence. Secondly, the increase in market demand provides the company with a broad space to obtain new contracts and customers. It enhances its competitiveness. In summary, Capstone services may present a good value added opportunities in the future and deserve investors' attention. The potential for return no investment is also an important consideration, especially in the context of increasing market uncertainty. Capstone has shown good income stability. And the third and the last stock we recommend is RSDFIN. RSDFIN investment potential deserves attention. First, its unsustainable financial performance show that the company has competitive advantages, especially in terms of stable revenue growth and profitability, which provides investors with an important sense of security. Secondly, the current growth trending of demand for financial services is obvious, which brings RSD Finance opportunities to expand the market in share. In addition, the strong management team with its rich industry experience and strategic formulation capabilities further enhances the company and market adaptability and risk resistance. Finally, the company considerable dividend returns make it a preferred choice for investors seeking stable returns. So this is it, and thanks for being with us till the end of the video. And remember all, investing involves risks and decisions should be made with caution. Explore investment opportunities to inspire your journey. This guidance is intended to share perspectives with the final decision making authority resting with you. Take care.